The thing is that the revenue of Lyft is actually exploding, but the loss is also getting bigger.
Yeah, I mean, ultimately, they're still in a huge price war with Uber in the US. This, if anything, makes things harder for the likes of Uber because Lyft is going to be slightly better capitalized, one imagines, over the course of next year. It's really interesting to see ultimately how this money is going to be used. Is it only going to be used to reward their employees who have any number of options which are coming up, or might they start looking at new markets? And if they're going to be able to tell that growth story in the course of the IPO roadshow, that might be the interesting question which a lot of people are going to be asking.
Well, Alex, you brought up Uber, and that's a very good point. How does Lyft differentiate themselves? Because Uber is also looking at perhaps an IPO, and Uber has done a great job of diversifying their revenue through Uber Eats and some of the other revenue streams that they've been looking at. How does Lyft differentiate themselves?
I mean, historically, we've seen them basically differentiate themselves on value, some sort of values, the sense that they are good for society, and Uber perhaps hasn't been. And I mean, that's probably not going to be enough to convince investors, one imagines. They do have a better exposure to things like bikes and scooters, which are far more profitable than cars, frankly, because you don't have a driver in the middle taking a huge chunk of the revenue. So I think Uber, on the flip side, is going to be talking a lot about its food delivery business and the potential for that business to diversify into the last mile delivery for any number of online products. So there are wrinkles which differentiate these two companies, but ultimately, it's scale which is going to be the winning factor.
Alex, do we know any more about how they will use the proceeds? I mean, we're coming out with some more headlines here, of course, about, you said, if they'll just reward management or some of the employees through this IPO, the CEO will hold about 29% of the voting power. Any other indications of what they could use this funding round for?
In all honesty, not that I've seen, no. But, as ever, it's perhaps no surprise that we see the founders take a disproportionate size of the voting powers. That is par for the course when it comes to tech companies. Interestingly, between them, they will not have, I don't think, a majority share in the voting share.